The U.S. Federal Reserve has opted to keep its key interest rate frozen for now, but says it is committed to raising the rate before the end of the year. While the decision was expected, most analysts seem to believe it will have little impact on Korea. Kwon Soa reports.
It was expected to happen soon. But on Wednesday, the U.S. Federal Reserve decided to keep its key interest rate steady again at near zero. The Fed says the U.S. economy is expanding at a moderate pace and is on track to grow between 1.8% and 2% this year. Speaking at a press conference in Washington on Wednesday, Fed chairwoman Janet Yellen said no decision had been made about the exact timing for an increase.
The committee continues to judge that the first increase in the federal funds rate will be appropriate when it is seen further improvement in the labor market and is reasonably confident that inflation will move back to its 2% objective over the medium term.
Some experts believe the hike, which would be the first since the 2008 global financial crisis, may come in September.
I still think it's going to end up being one of these decisions where the Fed's just going to have to close their eyes, hold their nose, and press the button. And right now, they're just not ready to press the button.
In Korea, the news of Wednesday's freeze did not come as a big surprise.
The decision was similar to Korea's market expectations. That's why in the short term it will have a limited impact on the country. But as it's seeming more certain that a rate hike will come in the second half of the year, investors and economic institutions will have to be prepared.
Vice Finance Minister Chu Hyung-hwan said at a macroeconomic and financial policy meeting Thursday that if the U.S. does increase the rate, it could have mixed results for the Korean economy. On one hand, it could result in an outflow of capital, but it could also be a positive sign for the export market. Kwon Soa, Arirang News.